Welcome to our channel. Today, we discuss a topic that may sound like science fiction but is closer to reality than you think: why cash could be illegal by 2030, and what comes next. Yes, the bills and coins you carry in your wallet might be gone sooner than you expect, replaced by digital currencies, mobile payments, and completely cashless systems. But this isn't just about convenience, it's about control, technology, economics, and even the future of personal freedom. So, let's dive in and explore why cash is disappearing, what governments and tech companies have planned, and what it could mean for all of us. To start, let's look at the global trend. Over the past decade, cash usage has been declining rapidly. In countries like Sweden and China, digital payments have almost completely replaced cash for everyday transactions. In Sweden, for example, less than 1% of transactions are now made in cash. Meanwhile, mobile payment apps and digital wallets are becoming the norm worldwide. The convenience is undeniable: you can pay instantly, track your spending automatically, and avoid carrying heavy bills. But this shift is more than just convenience, it's also about efficiency, control, and data collection. Governments have a strong incentive to move toward a cashless society. Cash is anonymous, which makes it harder to track taxes, enforce financial regulations, or prevent illegal activities. By moving transactions to digital systems, authorities gain unprecedented visibility into every purchase, transfer, and financial interaction. This allows for better enforcement of tax laws, reduction of money laundering, and prevention of financial crimes. From a governmental perspective, cash is inefficient, opaque, and increasingly inconvenient. In a world where digital transactions are faster, cheaper, and trackable, eliminating cash becomes a logical step. Tech companies are also driving the cashless trend. Companies like PayPal, Apple, Google, and Alipay are developing digital wallets, QR code payments, and mobile banking solutions that make using physical money feel outdated. Digital currencies, including central bank digital currencies, CBDCs, are being tested in multiple countries. These are government-backed digital versions of traditional money that allow instant transactions, programmable spending, and full integration with online financial systems. With such tools, cash might not just be optional, it could become redundant. But why 2030? Experts predict that the transition could accelerate over the next decade due to technological advancements, economic pressures, and policy initiatives. Governments are increasingly piloting CBDCs, incentivizing digital payments, and gradually phasing out cash in certain sectors. Banks, retailers, and service providers are also shifting toward digital-only systems, creating a network effect where using cash becomes inconvenient and ultimately impractical. Once a critical mass of people relies on digital payments, the government could simply declare cash illegal or at least obsolete. So, what comes next if cash disappears? The first major change is complete traceability. Every transaction you make will be recorded in a digital ledger, potentially giving authorities and companies detailed insights into your spending habits. This could have benefits like reducing fraud, improving tax collection, and creating targeted public services. But it also raises privacy concerns. Every purchase you make could be monitored, analyzed, and potentially used to influence your behavior. Another consequence is the rise of programmable money. Digital currencies could allow governments or banks to attach rules to your funds. For example, they could prevent certain types of spending, limit withdrawals, or implement dynamic taxes in real time. While this might sound like science fiction, it's already being explored in pilot programs. Essentially, your money could be more than just a medium of exchange, it could become a tool for policy enforcement. Cashless systems also have economic implications. Without physical money, governments could implement negative interest rates more easily, encouraging people to spend rather than hoard money. Debt collection and financial penalties could be automated. Even wealth redistribution could be more direct, with funds sent instantly to citizens' digital wallets. In many ways, the elimination of cash gives unprecedented power over the economy and the individual's financial autonomy. Of course, there are challenges. A fully cashless society requires universal access to technology, reliable internet, and robust cybersecurity measures. Vulnerabilities in digital systems could lead to financial disruption, hacking, or loss of funds. People who are not tech-savvy or live in areas without reliable infrastructure could be excluded from the financial system. These issues will need to be addressed before cash can be fully eliminated worldwide. There's also the question of resistance. Cash has symbolic and practical value, it's private, tangible, and under your control. People may resist being forced entirely into digital payments. Black markets, cryptocurrencies, and decentralized finance might serve as alternatives for those who want to preserve financial privacy. In fact, the rise of cryptocurrencies like Bitcoin is partially a response to the potential disappearance of cash and the desire for financial autonomy outside centralized systems. Another interesting development is integration with AI and automated spending systems. Digital money could be managed by AI wallets that optimize your spending, saving, and investing automatically. Governments could even introduce conditional incentives, like rewarding certain behaviors or discouraging harmful ones. For example, you might receive tax credits for sustainable purchases or restrictions on unhealthy ones. This level of control is unprecedented, and while it could improve societal outcomes, it also raises ethical and privacy concerns. So, while cash might disappear by 2030, it's important to ask, what does that mean for personal freedom? The convenience of digital payments comes with trade-offs in privacy, autonomy, and financial independence. On the other hand, it could make financial systems more efficient, reduce crime, and improve economic management. The future will likely require a careful balance between innovation and individual rights, between convenience and privacy. In conclusion, cash is on the way out, driven by technology, government incentives, and global trends toward digital economies. By 2030, you might find yourself unable to use bills or coins, relying entirely on digital wallets, mobile payments, and central bank digital currencies. This shift has massive implications not just for how we buy and sell things, but for privacy, control, and the very nature of money itself. While the benefits are clear, including efficiency, security, and economic management, the risks are equally significant, from loss of anonymity to potential overreach by authorities or corporations. If this video opened your eyes to the future of money, make sure to hit the like button. Subscribe to our channel for more deep dives into technology, economics, and the hidden forces shaping our world, and comment below with your thoughts. Would you be comfortable living in a cashless society, or do you think we should fight to preserve cash as a form of financial freedom? Let's start the conversation.